I've been in the investment business for 35 years, and I can tell you that corrections are healthy, they're normal. What's not healthy is straight up, that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08. So I'm not worried about the markets. Over the long term, if we put good tax policy in place, deregulation, and energy security, the markets will do great.
That was Treasury Secretary Scott Bessent yesterday on NBC's Meet the Press, saying he's not worried about the state of the market following last week's correction, with all the major averages falling more than 10%. Joining me to discuss is Roger Altman, Evercore founder and senior chairman. He's also former deputy U.S. Treasury Secretary. Roger, it's great to have you here.
Hi, Mike. Thanks for having me.
For sure, any Treasury Secretary would and probably should say, let's not get too excited about a 10% pullback in the equity markets. On the other hand, the idea that the policy mix right now is somehow kind of forestalling what would have been a financial crisis of some sort, perhaps because of the wide sustained deficits or anything like that. How do you think that all plays into the current environment?
Well, you're right. He's saying more or less what any Treasury Secretary would say in his shoes, although I think he might have added that they watch the markets carefully, which is a typical way of evidencing sensitivity to markets, which he did not say. But look, I think the biggest issue out there right now is the health and attitude of the U.S. consumer. We saw a weaker retail sales data this morning. We saw a weaker index of consumer sentiment on Friday. A number of consumer products companies, although not all of them, are referring to consumer hesitation. And after all, consumer spending accounts for about 70% of U.S. GDP. And in terms of why the consumer may be a little more conservative, I think it just has to be the blizzard of policy changes which we've seen over the first 8 weeks of this administration, which are dizzying and may be intended to be so. But I think inevitably they've created some confusion, or at least some concern on the part of consumers who are now being more conservative. And if that continues or deepens, then we may see lower growth going forward than might otherwise have been the case, lower corporate profits, and probably some incremental downward pressure on inflation, which has implications for the Federal Reserve and other implications.
It's interesting. Of course, Treasury Secretary Bessent mentioned, the deficit being around 6.7% of GDP last year, and almost everybody who observes those dynamics would suggest, look, long term, that can't be the way this continues. The structural deficit, obviously interest payments well over $1 trillion a year. Everybody would suggest you have to somehow try and, either bend the curves on revenue or spending one way or the other. What's interesting in this case is the blizzard, as you call it, of DOGE activity, where they're kind of going out there and just sort of on a very rapid basis canceling programs, laying people off. It's in the news. And so it sort of constantly seems as if there's this kind of, unease in government spending. And yet, for what, right? In other words, it's not like huge dollar amounts in the grand scheme of the budget. So it's an interesting way of seeming like you're doing a lot, but maybe it's not quite going to get to the bottom line.
Well, 2 points, Mike. One, I think the primary motivation behind DOGE is not fiscal. It's political. We're going to shrink the bloated federal government. And they're taking a meat cleaver approach to it. But I don't think the motivation is deficit reduction, because it's just not going to have that big an effect on it. It's going to be offset by things like, the adjustment early this year in the cost of living index for Social Security and things like that. But secondly, you're right. For us to have a deficit this large in good economic times is a really dangerous sign. And most people think on both sides of the aisle, that the fiscal trajectory of the United States isn't sustainable and eventually will lead to a really serious fiscal and financial crisis. So we'll see what the actual tax policy of this administration is as this year plays out. I think it's going to take till very late in the year for the reconciliation bill to pass and for the tax part of that to be clear. But they're not focusing on deficit reduction right now, that's for sure.